This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. We do have a little bit of a bounce. You can see we dumped on Friday, ironically, and I do mean ironically, right at that 1488 level. No joke. Boom, 1488. So the market went a little haywire intraday. You can see where VIX hit that 1488 and spiked viciously, and SPX dropped aggressively, but then held at 6807. 6807. So there we go. Now, it did form a bearish expansion candle, but that is support. So you have to still break that 6807 to go see basically 6700. And you can see it right here. And I wouldn't be surprised this week if we go visit that. So we have enough data coming in, especially employment tomorrow, to have exactly that scenario. We also have, let me just check something. Note we didn't have a true bearish engulfing, but honestly, it's close enough. Bearish engulfing where the top of this candle on a weekly engulfs the prior week. It was just shy. And I do mean like not even 2 points. So it's close enough. I can still see this 6807 busting. And then you can see on the intraday, we have levels. Everything is about levels. Depends on your time frame. You get the chase time frame, yada, yada, yada. Anyway, wouldn't it be freaking ironic if we actually closed the year at 6666? Swear, that's where we hit in September, where I said, okay, it's time to protect. I'm talking big picture. And we have gone sideways since. Now, that's not to say next year won't be moving higher. But for right now, I'm just worried about this week and wealth preservation for you all into the end of the year. So that's what I'm looking for, is a break of 6807, and then we would come back down and obviously 6750 on the daily. But big picture, it's really this simple. 6700. Just like, don't complicate it. If we get inside that 6807 and hold, we're going to head down to 6700, and wouldn't even surprise me if we overshoot to 6666. I don't make the rules, but I notice when they're making and they're changing them. So anyway, we'll see what happens. But that was on Friday, where we got a little bit of a volatility trigger, and Qs in particular. And then what really caused this 620 to dump? Remember, this was the Thursday, and then VIX hit that 1488 perfectly, and then Qs and anything. It was Avgo. And I had given 613 specifically. I said, all right, if we're going to dump, if we get a volatility trigger, we go into 613, and you can see we did. And you can also see that we did form a bearish engulfing. So yeah, we're heading to 603. So Friday, I did a kind of a look in the future. I hate to say prediction post. They're really hard to make. Any calls, especially about the future, but that's kind of what I did. So I did that Friday. We'll talk about precious metals and oil, but you already know my feelings on that. We're staying in a new lower range for oil and a new higher range for precious metals. But long story short, we do have a pullback, I would say, and we got reasons for it. We got lots of data coming in this week. Let's take a look. Oh yes, Avgo, of course. Yes, Avgo was in large part the reason for the season for the Qs dumping. You could see it was a perfect chase short. I mean, gorgeous. Look at this puppy. So it literally, this was after hours, and it opened in the morning at 378.84. Went up to 382, and I said we break 374, it's heading down to the 55, then the 100, and then in time, this 308.78. More importantly, this is an evening star reversal. We can come all the way back down to this 356.34. That's where I would see the target. And when we hit, literally from 374, we went all the way down perfectly to that 356.34 for Avgo. But I don't think it's going to be so easy to stay there. We could have a little bounce, but I can definitely still see this 347.66, which is also what I gave you. So that would be for this week. We also had Marvell, had a nice dump into that price target that I gave you last week, which was 85.18. And now we're underneath. So market's weak on the semi plays. And then NVIDIA had this rollover. Anyway, VIX was the reason for the season and for SPX to come on down. And Avgo was the reason for the Qs to come on down. And that was it in a nutshell. So on this last night, I wrote up things to keep in mind for this week. First and foremost, we do have lots of data. Finally, not October. October employment data is MIA. They didn't collect it, so they say. We do have, however, a lot of data tomorrow morning. So today will be probably light positioning. We also have a holiday. Not only do we have many who have already closed their books into year end, we also have Hanukkah. So thin trading. And we also have big data this week, from VIX expiration and employment data Tuesday to Bank of Japan late Thursday night, and options expiration for the monthly on Friday. So much higher probability that we fall than we rise. I'm still pretty convinced we're going to hit that 6,700 and maybe even 6,666 by end of year. Anyway, big picture though, the short chases really did work, even if it's little one, 185, 175. Some of them are more entrenched, but the point is, and this CRDO and Hood and App, which just started on Friday. And then we have a lot of cyclical longs that are still bouncing. Doesn't mean they're going to go straight up. They can have a lot of digestion because they're meeting a wall of sellers on the way up. But I did notice a few things that were new. I had already said CMG looked good, but Friday I'm like, you know what else? Shack and Kava, which is the Mediterranean version of CMG, is Kava. Anyway, these three look really good for restaurants. Again, they're part of my oversold cyclical plays for chases for a few weeks, and then we'll see. In time, short covering can create trend reversals. For example, MSOS. So this gapped up on Trump announced cannabis reclassification, caught that because Alexander highlighted it very much along with UNH. Thank you, Alexander. Anyway, the point is it triggered, it went up into that 100 week. Those were the targets, 532 prior high to 555, 100 week. And sure enough, it closed above it for the week and it's gapping up and staying above so far. But just remember, I'm not excited about this sector, not just personally, but I mean also because IV is so jacked and many of the components in MSOS are in fact penny stocks, or they were penny stocks and they did so many splits to become $1 and $2. This is not my playground. So, you're kind of on your own here. That's why I highlight the ETF more so than the individual plays inside the ETF. Anyway, we've got a few things that were a little new. I know client Jose had mentioned Ford earlier last month. I wasn't so excited about it. It scooped back. Now I am very excited about it, oddly. Roblox, new short. App, new short, as some of these have met their targets, very much so. Anyway, those are things to consider. Consumer cyclical rotation is definitely getting popular, but more importantly, I can see it has some legs, and I have not been excited about it before, but can I show you why I'm more excited about it now? This is, I think, the change is important in my intermarket. Let me just kind of show you a few things. Back in mid-November, this growth to value ratio was starting to break down. It was important. It was really important because that means value has a chance to come up off the ground. So it's really important also to the market because it means NVIDIA and all the Mag 7 tech plays are petering out. The narrative has finally kind of run its course. Anyway, that's an excursion, and then it comes back down, and this below 2.3 means value. It's time. You can also see down here MACD losing momentum, blah, blah, blah. Now, this is what it looks like now. This is the 12th. And you can see we stayed underneath 2.3 and then we dumped. And what's been moving strongly higher off the bottom? Lots and lots of consumer cyclical plays, of which there are many. From retail to restaurants, you name it. Just, it's a huge sector of mostly oversold stuff, except for Walmart. But Walmart wants to move to NASDAQ. I think that's a big mistake, by the way. Anyway, so here we are. We're still firmly entrenched underneath this zero mark. MACD is still firmly right below that November. It's weak sauce. That's one thing, but I have to show you this because this is fascinating. Very important for my consumer cyclical oversold bounce theme that could take on legs next year, and I've got two big charts to show for that. Number one, this intermarket tell of RSP to SPY. This is Mag 7 cap weighted concentration. This is oversold equal weighted SPY. And now this is important because it continues to fall, and I haven't been excited about this until now. I have not been excited about this sector until now. It's kind of like I wasn't excited about Rivian until just recently. It's wasted money until I can really see it starting to move. This is starting to move up off the ground. This is starting to do its digestion that meshes with the narrative change. Remember my post, sentiment has changed? So there's a huge divergence. It doesn't mean it's going to go straight up, and that doesn't mean it's going to go straight down, but it is in distribution, and that's the key thing for me. So now the cap weighted is in distribution. distribution, the Nvidias of the world, and oversold is definitely trying to catch its breath. And that's first thing. But no, that first thing was the growth value ratio I showed you on a daily. This is an intermarket tell that shows you underneath. But this is something very interesting that I realized it's finally ready. Look, this is S&P 600 small cap index. I know many people don't care about it, but institutions do trade this on a stock basis. It's definitely not an optionable one for the rest of us. So it's ignored, but it is definitely held by institutions. So I do still do my analysis on it because it's very important. It's not the Russell 2000. With 43% of the components unprofitable, it is when they do really well, they get moved into the 600 small cap index. So if these are the best of the Russell 2000, does that make sense? They move into this index. So this one's much more high quality. I like this one better. Anyway, the S&P 600 small cap index is SML in stock charts. But the point I'm showing you is when I do my intermarket underneath, can you see SML to SPX down here? Talk about, remember, we've seen these charts, Mag 7 taking off since January of 2023, and they outperformed in 2023, 2024, 2025, and this has underperformed. We all know this. But look at this now. I mean, look at this from that whole topping process all the way down here. This is ready to push higher. Like I can see this coming up above this ratio, like this wedge. It's starting to get very interesting to me. So anyway, slowly but surely, I think we caught the early gist mid-November, late November, I started writing it up. And here it is now in December. It's doing really well and it's outperforming and all that jazz. But I actually think this is more productive and I want to kind of stick with it. Anyway, this is that in a nutshell. And I don't think it's because the economy is reaccelerating. I don't think it's because rotation is all about safety into utilities and staples. Absolutely not. I think also they're screaming reflation. Reflation's not going away. No. Costco even said it this morning. Inflation is not only so sticky, also from tariffs, that they're removing products. They haven't lowered prices. PepsiCo is being asked to, but the point is they're removing products that are too expensive that aren't going to sell. So there's usually price over volume. Well, now it's not even shrinkflation. It's removal of products. Anyway, the point is it's going to hit margins next year. It's not, I think, traditional, and which is why I wrote this up. And then, of course, in lieu of sector rotation, there will be volatility. Right now, we have sector rotation. Anyway, the lazy bull AI trade is just over, and that's good. So now they've got to show it. It's show me the money. So we're moving into this yield curve steepener. And again, consensus is usually it's going to rise on a strong economic growth mandate. And I'm like, nope, I think it's going to be rising inflation for sure. And then positive for equities or earnings. It's more likely economic contraction from rising unemployment, falling disposable income, and recession risk pulled forward. Now, it doesn't mean we can't have that recession into all-time highs. That's what we've been doing. Well, the economy underneath is definitely languishing. But the point is, we're going to start playing with this a little bit more here on this steepener. And I just wanted to get my thoughts on paper, so to speak, why I think it's going to be misconstrued in the same way that this consumer cyclical rotation is not being focused on just plain old money flow. Anyway, long story short, we've got higher levels that I have identified as well as low. There is no reason with the market still pricing in. Are you ready for this? The market is pricing in a 16% 2026 upside, and that's about 7,900. And I can still see that 8,200, the same one that I mentioned in June. So the problem is I can also really see lower. We can hit both this year. We could have a very different first half from a second half. Midterm elections also. And oftentimes they want to pump it into midterm elections. So there is more danger on this. I'm going to need to time this for you versus just give you an upside or a downside target. I think we're going to hit both. Anyway, long story short, we've got my main themes. You already know them. Industrial commodities, not oil. Value, which is high quality. The ones that are oversold, not as bad as feared. The AI space, those that can still prove monetization. U.S. government as a venture capitalist is going to be bumpy, but it's still supported. Intel's not going to fall apart, but it doesn't have the momentum either to get hot fire flames. And of course, all things related to U.S. dollar debasement, which is also steeper 10 and 2-year yield curve, and precious metals. So it's not just industrial. Anyway, this is it. I've got a big write-up on repo, why it matters. And then, of course, they're doing stimulus, potential tariff rebate checks, but they're also, the Fed is easing, and the Fed is doing monetary facilities like that RMP to backstop, again, the repo market, but it might not be enough. We could still very easily have spiking unemployment and more inflation at the end of the year. Rising 10-year yields, that's my baseline bet. Unwind in NDX concentration risk, yen carry trades, I'll be looking for those. Right now I see distribution, and I do not see a big threat. Bank of Japan is excited, I'm sure, to be able to hike this week because Fed did cut last week. Remember my article, Japan has a Fed problem? Well, now they can move forward. Falling dollar is an issue. It's all about the rate of change. Same thing with oil. And then, of course, we could always still get into the black swan type thing where we have cold turned hot war, NVIDIA fraud, all that kind of stuff. Anyway, we did have, let's see, I gave you 2 price targets up and down. And the same thing I said in June, that literally I could see still an 8,200 as a big melt up, especially if we have a falling dollar, makes objects appear inflationary assets much stronger, and because of consensus that we're going to grow 16% this year, which I just read yesterday. I've had 8,200 as a melt up price target since June. But anyway, the point is, I also see the potential for pulling back. We break that 6666. It's very easy to go visit 6,500 and then break 6,500 and head down to 6,147. Remember at the beginning of the year, I gave you 4,800 as major support in a drawdown. On a 20% drawdown, same. We could still have a strong drawdown. That would be the lower level. I don't see us getting below that. And 8,200 definitely on the upside melt up. And it would be because of a falling dollar. And that's what I'm going to be looking for every day.
Join Club today to engage with Samantha and her team of 10 experts. Scan this QR code or click the link in the description. Subscribe to LaDuc Trading YouTube channel for more live trading room recap videos and other content.